Okay, guys, welcome to Highest Forex, African Rebel, and this is where we guide traders from foundations to freedom. In this video, I will be talking about multi-time frame analysis. I will be showing you guys how I do multi-time frame analysis trading smart money concept. All right, so this is the 2-hour time frame. I'm going to do a breakdown of this trade which we took on Thursday. Without wasting much of our time, let's get started. You can see that I use the 2-hour time frame, right? And for those of you who have watched past videos, I always tell you guys when it comes to more time frame analysis, make sure that you are what time frame dynamic, because some time frame you're going to see price too open, some time frame price will be too congested for us to understand. All right, so this is the 2-hour time frame, and this is where it all started, right? So it was on Thursday and it was in the morning, and this is where we met price 5 a.m. It's 2-hour time frame, so we're going to have right 5 a.m. right there. So we made price right here, but before we interacted with what price was doing here, I tried to look at what price has done, few swings before that. All right. So like I always say to you guys, the current structure has the highest probability of playing out, right? And based on this time frame, the current structure should be the last two significant swing points. Okay. So the first significant swing point from where price has already played out, significant swing point based on the trend we are having, where price have already played out. The first significant swing point I can have is here, and then the second or the current significant swing point is here. So price was actually bouncing around here. So these were the two significant swing points that were on this time frame, which is the 2-hour time frame. Now, for those of you who have been following me, the reason why I didn't use the 1-hour time frame, if you go down to the 1-hour time frame, you are going to understand why. Because I told you guys before, some time frames price will be too expand, too open, and too much of informations are there, so you have to shift to a time frame that you can get a clear view of the whole thing. So on the 2-hour time frame, uh, concerning relating the two swing points, like I always do, relating the last two swing points, you can see that significantly what happened to our last swing point was a significant break, right? So price broke through our previous swing point. So we have a break of structure here. So price broke significantly and closed above the last significant swing point, meaning what we are in an uptrend because we created this is a high. Price has created a high higher than the previous high. All right. So we are looking forward reasons to keep buying price. All right, but we are day traders and this is the 2-hour time frame, which is a lot, so we cannot just sit back and wait for this time frame to play out. That is where we're going to talk about, and that is why we're talking about multi-time frame, because we will now get to take advantage of other time frames other than our first time frame or our initial time frame of direction. All right, so this is a 2-hour time frame, right? And then we have a break of structure to the upside, signifying that what price is in an uptrend on this time frame, right? So after a break of structure, I always think to you guys, after a break of structure, what concerns you more is looking at the internal liquidity. And the internal liquidities are found at the significant pullbacks on the impulse that broke the structure. All right. So internal liquidities are the pullbacks, the significant pullbacks that are on the impulse that broke the last significant swing or the last significant structure. So looking at the 2-hour time frame, you can see we have this first rally, we have this significant pullback, we have that coming to interact with this high, and then coming down, it became a significant pullback. All of these were not significant. Why? Because it did not interact with the last significant pullbacks high. All right. So this became a significant pullback. We had all of these little drops and little drops. This is the reason why, or these are the reasons why I decided to do it with a 1-hour time frame, because all of these were just trendline liquidity seated here. They are not significant pullbacks. All right. So we went like so, and then we have this little pullback. This became a little pullback and significant pullback. Why? Because price already interacted with a swing high. Those of you in the community, I'm sure you understand what I'm saying, right? So we have this last, then we have the high created, and that high became valid when price came through the last significant swing high and what broke significantly below it. Sorry, the last significant swing high, the internal high, when price came through it and broke significantly closing below it. That is when this swing point became valid, and then the higher high was created. So before that, we had little price drop. Price reacted to it. Those people looking to buy double tops and double bottoms, I'm sure there was the buy. So we had a reaction. Price came through and then close below it. So for those of us who trade SMC, we started looking for what? Internal liquidity again, and then that is why we started looking for the sells, right? So before we go there, this is what we're going to tackle on our medium time frame. So before we go there, we know that on this our time frame now, since price, the first interaction that price have with our significant, the first significant pullback, which is what? The inducement, all right? You can call it first, you can call it like depending on when you're counting. If you're counting from here, it is going to be the last. If you're counting from the current structure, it is going to be the first significant pullback. All right. So the first significant pullback, what price does to it tells us if price is to go to the other significant pullbacks that are seated there. All right. So if you look at all of this, we are unable to filter out its relevant order block for price to mitigate. So the next significant pullback was this guy. All right. This is the next significant pullback, and after that significant pullback, we have this one to be the extreme pullback. All right. So we have this inducement. Price came through the inducement and closed below it. So we know that since price failed to respect this inducement and keep buying, we know that price is what having the potential of coming to interact with what the next significant pullback, since we have no other block that is valid on this time frame. You can zoom in and you can see that there's no other block there. Now another confluence why I know price have to, or why technically we see that price have to come to this this level, is because of the trendline liquidity which was seated here. All right, so we have a trendline liquidity seated here. For those people who trade, or for those people who would have been stuck on the 1 hour time frame, there have been multiple reasons for you to keep buying here, and that is the reason why we got all of this reaction happening. All of these reactions because people are putting buys on something that they have identified here from the 1 hour. But if you are not, if you don't really look into price, you are going to actually fall for it. So I filtered it out and I understood that this was just trendline liquidity, and no price would come to take, especially come against the 90. All right, so we had this as the target. If you look at the screen, you can see it there. We had this as the target, right? So this is our directional bias time frame, and this is what we have studied out on Thursday because we met price right here.
It's 7 o'clock.
Thank you, Samantha. So we met price right here, and then I knew that price closed, significantly below our inducement. So we know the next target, or the next probable area for price to react from will be what our engineered liquidity, or one of the extreme liquidities that have been on this extreme liquidity right here, right? So that is what we need to know from this time frame. On the directional bias time, you only get to figure out where is price likely to go. You only get to figure out confluences to confirm the trend of your medium time frame. All right, so on this 2 hour time frame, we are in an uptrend because we created what a high higher than the previous high. All right, so we are in an uptrend. So from there, now I'm going to go to my medium time frame. So because I use the 2 hour as directional bias time frame, I chose to use the 1 hour as what the medium time frame, which is the time frame where I get to look at the current structure, respecting the the law of the current structure have the highest probability of playing out. All right, so the 2 hour was our directional bias, and the 1 hour is currently my medium time frame. The 5 minute is where we get to filter the entry. All right, so like I said to you guys, make sure you are dynamic about your time frames. Only go to time frames where price actions is clear enough for you to understand. All right, there's no time frame. Nobody's going to tell you that if you are this type of trader, stick here. If you are that type of, no, it is all dynamic. So this is the 1 hour time frame which we are using as our median time frame. Each time you're on the median time frame, your focal point should be on the current price swing. All right. So the current swing on the 2 hour, we have already understood that, and from understanding all of the 2 hour price action, we have understood why we are now looking at this place to be our to be our target. All right. Now, if you look at that, we broke through the inducement, right? And if we break through inducement significantly, means what? We are having a change of character, and that change of character on this medium time frame, right, is an inducement on the higher time frame or the directional bias time frame. But on the medium time frame, it is a change of character, because if you pay attention, you can see that we are floating up, having a good uptrend. By the moment price broke through that significant that inducement on the higher time frame and close below it, we are now in a downtrend, and we are looking for price to go until it reaches the next significant liquidity level that we have identified from the higher time frame, or from our directional bias time frame. So price broke through our inducement, became a chalk on our medium time frame, and after the change of character, or after a break of structure, I always said to you guys, they say patterns repeat. It also applies to every type of strategy you trade in the market. Whatever you trade, they all repeat. All right, everything you trade repeats itself. So we have a breakthrough, a particular significant swing, right? The impulse, there's a significant pullback on that impulse that broke through that swing, has what? The internal liquidity. So there's the first internal liquidity, which is the inducement, and then this is another one, which is what? The engineered liquidity. So when price came through it, you can see price came through, and then we had another drop down, having a what? A break of structure here, because we are looking toward price is looking to battle itself till it gets to this level. So we have another break of structure here. Now pay attention to this. When price came through, there was a firstly there was a sweep because price didn't close below. It only reacted because definitely there are people looking to trade what equal lows and equal high, double top, double bottom. So price reacted to that. Price came back down again. The moment it closed here, this became what? A change of character. This is where the break of structure got confirmed. The first one was a sweep. It didn't confirm break of structure. So after all of the reactions there, and price came through it again here, this is what confirmed the break of structure. After that break of structure, since that time, price only kept creating internal liquidity. So we are going to have this like so, like this. Then we have the first liquidity created here. Instead of price coming to take it, price didn't take it. Instead, what it came, this was a sweep. So all of these are what internal structures, they're not significant enough because it only came to swept. So price had that push and then we had this drop. All right. So since that break of structure here, we have only had one internal liquidity, another internal liquidity. All right. So we have two significant pullbacks, which is what the inducement right here, and then the engineered liquidity at the extreme. All right. So the same way we're looking at price to take engineered liquidity and whatever on a higher time frame is the same way we look at it on a medium time frame as well. So we have the inducement here, and then we have what the engineered liquidity right here. We have the engineered liquidity right here. So after all of this, what do you look for? You look at what candles, or you look at the order block candles or any of the PD arrays that price can actually react from. All right. The only thing that was spotted on this 1 hour time frame is an FVG. All right. It's there's no other block here. The second candle after it mitigated it, so it's not another block. So it was only an FVG that was spotted right here. For me myself, I didn't spot this FVG. What I did is to go back to the 2 hour time frame to filter myself what's it called, an order block. But you can see on my screen a student of mine filtered the FVG and then he was able to um, take price from there. All right. So for me, I didn't filter out this FVG. I went to the back to the 2 hour time frame to see if there will be something here for me to look at. All right. And luckily enough, we met the price here, so it was already set up for us. We met the price here, so everything was already set up. The moment you come, if you understand, if you don't understand how to trade or how to deal with price or how to read price the way I'm breaking it down like this, you definitely understand that price is just all cooked up for us to come and liquidate it. All right. So I went back to the 2 hour time frame to find myself another block because I trade more of the other blocks than the fair value gaps. So price did what? I had another block set up right here. You can see it on my screen from the setup I gave to my community members, right? So I have another block right here. Price didn't mitigate my other block, but I got this entry, right? You can see my entry on the screen, but you can see my lot size. So that's how I trade. Whenever price did not meet my expectation or price doesn't meet all of my setup, because the moment I do the setup I also listen to my risk management. So whenever price don't meet my setup like that and I see the potential is high, I get to join the trade with what I know that even if whatever happens I don't care. So after outlining all of my setups and looking at where price is likely to reverse and all of that and blah 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 and react on, what I do is to go and settle on my entry time frame to wait for price to come there, and then I will use that time frame structure to finally execute the trade. Like I said to you guys, this particular trade I was looking to enter on the 5 minute time frame. Why? Because of the fact that I started my directional bias from a much higher time frame than the one I used to, which is the 1 hour. So I started on the 2 hour. My median time frame shifted from 5 minutes to the 1 hour, and my entry time frame shifted from 1 minute to the 5 minute as well.